Okay, this guy is a professional currency trader, awarded at the London Stock Exchange as the world's #1 currency educator. Current senior trader at LTG Gold Rock, and he lives in my hood in Queensland. So he's got juice. Everybody, get on your feet. Give it up for Andrew Barnett is in the house. Give it up for him. Come on, make some noise.
Thank you. All right, good morning. Please have a seat, everyone. Good morning.
Good morning.
Come on, guys, you can do better than that. Good morning.
Good morning.
There we go, that's better. Whose team should I be on? Oh, we better not play favouritism, so. Have you guys had a good couple of days?
Yes.
Excellent. Well, I hope today is going to be exciting for you as well. Jamie has invited me to come along today and share with you my story and what I've been doing for the last 10 years or a little bit more than that now, but really how I could potentially make a shift in your life financially from where you are to where you want to be. Who would like to take their income from here to here? Hands up. Well, many years ago, I lived in Melbourne. I live in Noosa Heads in Queensland now. And throughout my professional life as a professional athlete, as well as a professional trader, I've always had a desire to get my income to a higher level. And I tend to find that whenever I ask the question, who wants to make lots of money? Everybody says yes, right? But the reality is a lot of people don't make the commitment in here to actually get them to where they need to be. And I'm here today to share with you an instrument and a market that can help you get there. But I'll tell you one thing right now. The only thing that is stopping you getting the financial rewards that you desire and you want and you deserve is the story that you keep telling yourself in your head as to why you can't do it. That's the reality. So today, I'm going to show you how to start to make the shift. And if you like, if you enjoy what I do and you like the rewards that I get for our clients and how we invest and trade together, I'll give you an opportunity to come and trade with me. But I will tell you now that I'm not interested in coaching people who aren't committed about financial change. Everybody wants to make more money, but there are certain things that you need to do to get it. And I'm happy to show you, I'm happy to coach you, I'm happy to be your mentor, and I'm happy for you to follow me. And I'm going to share with you today what I do to give you an opportunity whether or not you want to do that. But I will stress that I only want to work with committed people, and if you are committed for financial change, well, we'll get on really well and you'll really enjoy the next hour or so. So who is actually committed to financial change here? Okay, and if you're not, perhaps one of the other speakers throughout today may be able to get you shifting towards that aim and that goal. All right, so let's get into it. I want to let you know that we are talking about a financial instrument today. I am licensed with the Australian Securities Investment Commission to give you the advice that I'm going to give you today, and there is a financial services guide at the back of the room that I can provide you if you would like to have one. Of course, we are talking about the biggest financial instrument in the world. Does anyone want to have a guess, by the way, how much money trades in the currency market that I trade in a 24-hour period? How much money actually changes hands every single day, day after day after day after day, Monday to Friday? 4 trillion. It's actually now $4.2 trillion a day. Not a month, not a week, that's a day. There is more money that trades hands in the market that I trade and that you might like to trade in one day than the world stock markets combined trade over 15 days. And it goes 24 hours a day, it doesn't stop. In fact, the currency market is actually open right now. Okay? So we're going to be talking about the biggest financial instrument in the world. We're also going to be talking about the fastest growing instrument in the world today when it comes to investing mum and dad investors. Who am I? Well, today I'm a professional currency trader, but that was my life for 20 years. I grew up here in Melbourne. That was me competing on the Yarra River down the road here at the Moomba Masters. Who heard of the Moomba Masters water ski tournament? You would have seen it maybe on TV. I competed in that for a number of years, and I lived in the United States as a professional water skier. I skied on the tour there for a long time and had a great life. It was fantastic. The only problem was when I retired, I wasn't financially independent. I didn't have a lot of money. And, you know, I'd lived a great life. I'd had a fantastic time. But at that stage in my life, in my late 20s, I just got married. I'd had 2 kids at that stage. I have a wife and 3 kids now. And when those of you that have kids, who's got kids in the room? Fantastic having kids, but they cost a little bit of money, and as they get older, you want to send them to good schools and all those sort of things. I didn't have a lot. So I started working for my sponsors. At the time, it was Rip Curl. It was a couple of water ski manufacturing companies. And in about 1998-99, when I finished my skiing career came to a halt very, very quickly, an abrupt halt on one day, in one moment, in one instance. On the left-hand screen, I was ski jumping there at Moomba many years ago, but I was actually in the States competing at a tour event over there. And I hit the ramp a little bit late. And as I hit the ramp on the corner, I snapped my femur in half, here, like that. And that was pretty much the end of my career. I had a rod stuck from the top of my hip all the way down to my knee, 2 screws in my knee, 1 through here, and that was basically it. The doctor said, no, you'll be fine, you can still do this, but in here it wasn't quite the same anymore after I did that. So that was my skiing career finished. But I always had an active interest in the financial markets through my skiing career. I always wanted to make more money. I'd had the chance to be around for some successful investors, but I really didn't know how to do it myself. And when I left the water ski industry in 2000, it was to go on a quest to finally do something different in my life other than being a water skier. I'd done this all my life. I learned how to ski when I was 4. I used to drive up to the Murray River on the weekends with my parents. We used to go down to Patterson River after school, daylight savings, to ski every day. But I had nothing else in my life. I went to Sindel Tech, that doesn't exist anymore, out in the eastern suburbs. I don't have a university degree. And I only had my water skiing career to fall back on. And I was making about $50,000 a year as an income. And I knew it wasn't enough, it wasn't me. I had much higher desires and goals for myself, as many of you do here today. So I embarked on a career of how to learn how to invest myself, how to learn how to invest in the financial markets and make an income. And for me, that was a quantum shift, that was a big change. And that's myself standing in the trading pits of the S&P 500 in Chicago, where a couple of $1 billion is traded in the pits there on a daily basis. And that's me at my trading desk at home in Noosa Heads in Queensland. Back in the old days, standing in the pits, they used to buy and sell using their hand signals, and they still do today. But today, everything I show you is we do electronically. In fact, you can do it on your phone, you can do it on your iPad, you can do it from anywhere in the world that you have an internet connection. And when I first started on this quest many years ago, I virtually knew nothing. And over the last 10 or 12 years, I've managed to not only change my own life financially in a big way, but also help a lot of other people. And many people from events like this, they say, well, if you make so much money trading currencies, what do you do this for? Well, today, I really enjoy the opportunity of sharing with other people how it's changed my life, but also as a currency investor, as you'll see, I have a lot of time. I have a lot of time during the day. And back in about 2004, in fact, I was bored. I didn't really have much to do. You know, in the mornings I'd trade, I put my trades on, and then for the rest of the day I had nothing. And my life became quite empty. And I went and started working with a guy called Peter Ellsworth, who's the chairman of our company now. And today, as you'll see, we have a successful organisation that is ranked the #1 in the world. That was Peter there, the gentleman that taught me how to trade when I first started back in 2000. He's in his 70s now. I'm 43. He's a lot older and wiser than I am, and he's been trading the markets for over 40 years. And I can tell you, if you are genuinely committed to changing your life financially, I can tell you the best place to start is in an event like this where you find a mentor. Find a guide, someone that can help you that's actually been there and done it. You don't want to follow someone who hasn't been there and done it, that say, oh yeah, I can show you how to do it. You want to actually follow someone who's actually doing it and has climbed up that financial mountain that you want to get. And he was my guide. And I had great pleasure back in 2011 when I got a phone call from the London Stock Exchange, and it was a gentleman on the phone with an English accent, and he said, "Oh, we want to invite you to come to London." And I said, "What for?" And he said, "Well, we think you guys are the best in the world at what you do, so we'd like to give you an award at the London Stock Exchange." So I said to Peter, "Come on, let's go." And we went and we accepted the award. We never started our business because we wanted to win awards. We started because we wanted to help other people achieve the financial outcomes that we've been achieving and get them to a level where they can do it as well. And since then, last year, our company, LTG Gold Rock, who I'm a founding partner of, was inducted into what's called the World Finance 100 in 2012. Today, we sit along other companies there. You can see Google, Sony, Red Bull, Apple, Amazon, in the 2012 World Finance 100 list. And that was also a big thrill for us, as was just a couple of days ago when I was given the award by the Assistant Treasurer of Australia, Arthur Sittadinis, in Sydney, at the Australian Banking and Finance Award as the best currency education company in Australia. So I hope today that you have a bit of peace of mind, that you're in good hands, and what I'm going to share with you and show you is a wonderful opportunity for you to learn how to get to where you want to be financially. We run a private investment firm that helps people become independent. Who's ever given their money to somebody else to invest on their behalf? Hands up. Yeah? Who's got your money in the bank right now? Hands up. Okay, you're giving your money to somebody else. When you give your money to somebody else, what do you live in? Who said hope? You live in hope. When you give us the money to somebody else, you live your life in hope. You don't want to live your life in hope financially. You want to live your life within control and be able to manage what you're doing. Because let me tell you this, if you want to get where you desire financially, at some point, maybe not today, but at some point, you need to be in the money business for yourself. Talk to anybody who's independently wealthy. Talk to Jamie, talk to the other speakers today, and ask them, do they give their money to somebody else to help them get that financial reward? What do you think the answer is, yes or no? No, they don't. They learn how to do it, and they achieve that financial success from being in control themselves. We help people get the absolute best value out of investing in the currency market and being able to do it wisely and securely and in an environment where we're not risking the farm, we're just simply going about our business and building genuine, consistent returns. And I'm going to show you those returns today, because if I'm going to stand on this stage and tell you I can help you make money, you want to see clients that are actually doing it, right? And you want to see people that are ordinary mums and dads, correct? And you want to actually see, are they making a $500,000, $1 million, or are they making a few $100,000? I'm going to show you that today, okay? Because that's important. For me, as an educator and someone who's wanting to help you, I want to show you the sort of success that you may be able to have. But this is part of why I love doing what I do today, because can you go to university or college and learn to be a professional currency trader? Ever heard of them offering degrees at Melbourne Uni or Swinburne? No, they don't. They don't have them. Well, I love going to young kids today, and I get invitations all the time to go to colleges and different organisations and teaching the young kids about the biggest financial market in the world. I wish I was given the opportunity to learn what I know now when I was 17 and 18, because I probably wouldn't have chosen the path that I did. Even though I had a great time, I would have been able to get there a lot quicker. So today I have a great life. I think I have the best career in the world. I live in Noosa Heads in Queensland. Who's been to Noosa before? Lots of you. It's a beautiful place. And I love coming back to Melbourne because this is where my family is and this is where home is for me. The faces of the success within our organisation that you'll learn about today come from a place of just simply wanting to get ahead financially. I am not going to tell you today that I can help you make $1 million in the next 6 or 12 months, because that is totally unrealistic. What I can help you is start on the road to be able to achieve higher, consistent returns on your money over the next 3 years, 5 years, and 10 years. And for some of you, that'll be starting with a few $1,000s. Some of you, it will be starting with a little bit more. For example, who in the room has got self-managed superannuation? Hands up. A handful of you. Okay. Self-managed superannuation is a huge growth industry in Australia. Who has superannuation, regular superannuation? Okay. In the next 5 to 10 years, I encourage you to look at looking after your own money. Because I can tell you now, do you know what the average in the last 10 years, the average super fund, the medium super fund return is on your money in the last 10 years, the average before inflation? You want to have a guess? 1%. It's about 4.5%. Do you know what inflation is? What's inflation? 4%. It's the cost of things getting more expensive. In this country, it runs at about 2.5% on average. So if you take the 2.5% off the 4.5%, what do you get? Not much left. Okay? You want to be in control of your money. But if you want to be in control of your money and you take control of your money, what do you have to have? Knowledge. You have to have knowledge. You have to have the understanding of what to do with it. There's no point just saying, well, give me my money from my super, I'll invest it in the market, or give me my money out of the cash, I'll put it in the markets, if you don't know what you're doing. Because what do most people do when they try and do it on their own? They fail. Who's invested and traded in stocks and shares and currencies and Forex and all those sort of things before? Okay? Were you doing it on your own, predominantly? And what was the success rate like? Be honest. Probably not great. Okay? So you need to have a mentor to show you how to do it. But I want to show you how to do it the right way. All right? I want to show you how to build investment returns that are genuine and realistic, but also understand the market well. I'm going to give you an opportunity to understand currencies today a bit better than what you do right now. I'm going to tell you why the Aussie dollar is going down and why it's probably going to continue to go down, and share with you a little bit about how we go about making those decisions. Okay? How can I ultimately help you? I tend to find that people's outcomes are all a little bit different, but ultimately generally always the same. And this is them. Show you how to work a little less. Who'd like to work a little bit less? Earn a little bit more? Yeah? And also manage risk incredibly well. Not many people get excited when I say about the managing the risk bit. What do you think they get very excited about? How much money can I make? How much money can you help me make? But don't forget, if we're going to put our money into any financial instrument to get ourselves where we need to be financially, we're going to have some level of risk. How do you think the average investor manage their risk on their own? Well or poorly? Poorly. They don't handle the leverage well. Risk is incredibly important, but it gives you the degree of comfort, which we'll go through today. And be finally in control. And that's where a lot of people find. Like I find right now, a lot of Australians financially got their head in the sand and their bum in the air. And they're just living in hope that they don't lose their job, or they don't have the financial institution give them a poor return again. I don't want you to live in hope anymore, and there's no need to. You can start to invest wisely yourself, but you've got to start from somewhere, and I want to give you that inspiration to do that today. What sort of investor are you? Do you like giving your money to somebody else? Those of you who are giving your money to somebody, does it feel good doing that? Yeah. It does? Maybe initially? After 12 or 18 months, not so great? At the end of the day, the most important thing is that you feel in control and you have a pathway to know where you're going. That's important. If you want to be a successful investor, there needs to be some sort of vision of where you want to go. And I know I've been to these events before over the years, and I've known Jamie for a long time. What you're learning about yourself and what you're learning about what goes on in here is what ultimately drives financial markets. Emotional decisions, emotional behaviour. Who in the room here over the last 3 days at some point has been emotionally moved? Hands up. Okay? When you invest in financial markets, what do you think moves you more emotionally than a family member not being healthy or death? What moves you emotionally? Fear of losing money. And many people are fearful of financial markets because of that emotion. You know, that's sort of like a picture of my life at the moment, I guess, living in Noosa Heads, where I get to invest and enjoy my time surfing. And I know that's not your goal, many of you may not be. But what we need to do is we need to work backwards. And what I do with every one of our clients is I work backwards in relationship to, well, what is it that you want? And don't just tell me money. I just want to make a lot of money. Everyone says that. No. What is that you really want? How much return on investment do you really desire to get the things you want to do in your life? And what we then do is we work backwards and say, well, what do we need to do to get it? Most people just say, oh, yeah, well, I just want the big house and the flash car and the $1 million. But there has to be some sort of pathway to get it. And that's what I'm all about, sharing with you how to do that and doing it properly and successfully. These are some things we know for certain. Banks offer low, safe returns, but it's not enough. It genuinely is not enough. Fund managers offer low returns, but not so safe. In the example here, 4.5% on a medium balance fund every year for the last 10 years. Did you know most Australians today, at the age of 70, have got how much of their superannuation left, do you think? Zero on average. Zero. There has never been a better time to start than now. Because does life go quickly? Yes. This year has flown by. Next year will be the same. And the year after. And the year after that. So we've got to start somewhere. Unemployment is on the rise in this country. And I'm going to share with you some cold, hard statistics today just to make sure that you are absolutely fully aware of what's really going on. In Australia right now, unemployment is on the rise and unemployment is around 5.7, 5.8%. The Treasury Department thinks unemployment's going to 6.2% between now and the middle of next year. That means tens of thousands, potentially 100,000 Australians are going to lose their jobs. What are they going to do? They're going to look for another job and they're going to live 4 weeks on average in front of a debt collector. That's the average Aussie's reality. If they lose their income, they're 4 weeks in front of financial stress. And what's the worst thing that creates tension in a household, tension in a partnership, is financial stress and money. It's very stressful. And paying the bills is not getting easier. Even though the government says today that inflation at the moment is about 1.8% here in Australia right now, even though they say that, do you genuinely think things are getting cheaper or more expensive? The last time you filled your car up with petrol, every time you do it, it's like, ugh. You just want to put the $50 in, but you know that's a losing thing. I may as well fill it up. You go to the supermarket, things seem like they're getting more expensive. You've got your electricity bill lately? They're going through the roof. Things are not getting any cheaper anytime soon. And certainly for those of you at that age where you can have some savings, you know, I live in Noosa Heads and in my street, everyone's retired virtually. And they all moan about the fact that when they put their money in the bank, they're getting less and less and less and less. Well, I can tell you right now, we're, the 1st of December today, and in March next year, I'm predicting that interest rates will go down again. So interest rates will probably go down to 2.25%, official interest rate for the RBA. That means those of you that have got savings, you're going to get less on your money. And interest rates will probably be 2.25% this time next year and stay that way for the next 12 or 18 months. The economy in Australia at the moment is going backwards. Joe Hockey, he wasn't at the dinner I was at last Friday night, but the Assistant Treasurer was, Arthur Sinodinos, and I asked him, I said, the debt level that you guys looking for, 500 billion, $500 billion, are you genuine about that? Are you genuine about that it might hit that? Do you know what he said to me? Yes. That's why we asked for it. So in this country, it's never been a better time to educate yourself right now about the things you're learning about over these 3 days. What people want are genuine cash flow outcomes that are genuine, that don't risk the farm, that are proven to work, and you can be able to understand it and how they do it. Now, right now, I'll just give you a little bit of an insight into what the average person does versus what I'm going to teach you how to do. When it comes to investing in shares or options or futures or currencies and all of those different financial markets that some of you know a little bit about, some of you know a lot about, investing in those markets for most people, to make the decision to buy and enter or buy BHP or buy the Aussie dollar or what it might be, what do you think they use as their decision-making tool to do that? What is it? Maybe someone else. But visually, when they look at things, have you seen them look at these charts and things like that? What's called technical analysis charts. Have you seen them, where the way they track the price and all those sorts of things? Have you seen those before? I can tell you that that is the road to failure. When you go into an institution and a bank, when I go on the trading floor of a major institution and bank, and I may get the opportunity to take some of you on some of those trading floors, like I took some traders to Chicago on the trading pits there. What do you think banks and institutions use to make their decisions to make the billions of dollars of profit that they make? What do you think they understand better than the losing traders?
Forecasting.
They understand the economic data that is coming out. They understand what is going on fundamentally. They understand about inflation. They understand about growth. They understand about unemployment. They understand about all of the things that ultimately drive the Australian dollar. But there is only one thing, that I'm going to teach you that is the most important thing that you will know about trading currencies for the rest of your life. Because there's only one thing that makes the Australian dollar and all currencies around the world rise and fall predominantly, and is the most influencing factor, and I'm going to teach you how to master it. Do you want to take a guess at it? Do you know what it is?
News.
I've just said the news. It's not the news. Sentiment? No, it's not the sentiment. We talked about it might be going down in Australia early next year. The one thing that impacts currencies around the world more than anything else are interest rates. Interest rates. Now, right now, where did I say, and where does the government and most leading economists in Australia think interest rates are going in Australia? Up or down? Down. So where do you think the Australian dollar is headed right now? It's been going down for the last 4 or 5 weeks and will most likely continue to go down. And I said in the financial review just a couple of days ago that I thought the Aussie dollar was going to go down, and it continued to go down. The US. Does anyone know what interest rates are in the US? 0.25%. Basically zero, right? They're about as low as they can go. Who recently has heard about the US economic recovery? Yeah? Steadily, slowly recovering. If interest rates are at zero in the US, what direction do they have to go? Correct. And if interest rates go up in the US, what do you think is going to happen to the US dollar? Up. And if interest rates are going down in Australia, what do you think is going to happen to the Aussie dollar? Ka-ching. That's how we make money. Understanding interest rate differentials. That's what's going to separate you, those of you that have traded before, from losing to winning. And I'm not going to be able to help you win every single time. We will have losing positions in the market. But as you'll see in a minute, I'm going to show you specifically how much we lose, how much we win, and I'm going to show you the blueprint, because there is a blueprint. There is a blueprint to understanding 2 things when it comes to making money in currencies. One is understanding what central banks are going to do with interest rates. In the next 3 months, when I bump you in the coffee shop, if you're one of my clients and say to you, what's the Bank of England interest rate right now? What's the ECB rate? What's the Bank of Japan rate? What's the Reserve Bank of New Zealand? What's their rate? What's the Australian rate? If you're not able to say to me, Bank of England is 0.5%, ECB's 0.25%, Bank of Japan 0%, New Zealand's 2.5%, Australia's 2.5%. If you say to me, I don't know, what would you think I would think about your success as one of my investors? Probably not making money. When you come and trade with us, there are no excuses. Because I'm going to give you the blueprint to making money as currency traders. I haven't told you this yet, but one of the reasons that I've had the success that I've had in the last 6 or 7 years particularly is because when the GFC happened, what did a lot of banks do? Well, you may be aware of this, you may not be. What do a lot of banks do to a lot of their employees when the GFC happened? They got rid of them. A lot of the very successful traders in those institutions and banks got let go as well because the banks changed their risk profiles for a while. So those billion-dollar currency traders that were working at Goldman Sachs, BNP Paribas, Commonwealth Bank, National Australia Bank, they were out of a job. Guess who hired some of them? Me and my partners. The first guy we hired was a guy called Tony Sycamore from Goldman Sachs. We hired the senior trading floor manager from BNP Paribas, a guy by the name of George Sayers. They didn't have jobs. And I went to a headhunting firm in Sydney and I said, knock, knock, my name's Andrew. And the first thing he said to me was, which bank are you from? And I said, I'm not a bank. And he said, well, what are you then? And I said, I'm a private trader. I said, surely you've got some traders right now that have been let go from some of the big banks that are looking for work. I'd like to hire them to trade my money and my investors' money. And we'd like to learn what they were doing at the bank. Nah, they won't be interested. They won't be interested, mate. You won't be able to pay them enough money. I said, how much do they want? And they said $250 base plus commission on top of that for winning, making money. And I said, no, I'm not willing to pay that. They said, okay, see you later. Boom, hang up the phone. I thought, I'll ring back in a few weeks' time, see if they're still out of work. Ring, ring. Hello, it's Andrew Barnett again. Yeah. I said, are those guys that we were talking about the other day, are they still out of work? Yeah, they're still out of work. I said, okay, well, I'll give them 100 as a base. And then I'll pay them money on top of that. I said, okay, I'll get back to you. A couple of days later, had my first trader. So, how did we learn about how banks and institutions make fortunes? By learning from the very traders that traded their money. And a trader that I recently hired that still works for us today lives in Zurich in Switzerland. And his name's Gary Steckel. And he used to control $1.5 billion for Credit Suisse. And he was one of the most successful currency traders in Europe. He retired and I found him living in the Bahamas. And he now works for us privately. He still has contacts in all the major institutions and banks, and every week he tells me where most of them have got their orders. And then I give it to you and tell you which direction they're trading. Is that inside information? Is that against the law? No. It's just having good contacts. Okay? So they're the sort of things that you're going to learn. They're the sort of things that you'll understand. And when we have the opportunity to be able to invest wisely, here are some facts about making high returns that are absolutely real. High returns today come from shorter forms of investing that offer more flexibility. For example, buy and hold strategies in the stock market today, it's dead, finished, done. What you need to be able to do is invest in shorter, more flexible forms of investing. And the average Australian struggles with that if they don't know what they're doing properly. Knowing who to trust and listen to is really, really important. Because if I'm going to tell you I think the Aussie dollar's going down, or I think the US dollar's going up, that's just one piece of the puzzle. Getting in, right? Getting in is the easiest part of investing and trading. What do you think is the most challenging and rewarding part? Knowing when to get out. That's more important than getting in. Any one of you can get in right now and go and short the Aussie dollar tomorrow. Knowing when to get out is the most important thing. But also managing risk is also critically important. And I'm going to show you today how institutions and banks do it, and I'm going to show you the blueprint of the numbers that we will use together to help you to get the return on investment and ultimately whatever it is physically that you're looking for or emotionally when it comes to money. People are happier when they've got more money. I know that. You know that. So there's no point sticking your head in the sand and hiding from it. The reality is, if I can help you make more money, let's do it. And I think I genuinely can. These guys are doing it. And the sort of returns on investment, in fact, the gentleman in the middle there in the snow, Alan Davis, I'm taking 20 of our traders, if you can come if you want to Japan in March to his private snow ski lodge in Niseko in northern Japan. And he is one of our clients that I've trained him, and he's actually going to train our clients in the snow. We're going to ski during the day and we're going to trade at night. And he's going to be coaching you. So there's not many organisations around the world that teach people how to make money. The successful clients from their program actually then end up teaching the new clients that are coming in how to do it. That's what we do. And what we share with you is how to understand currencies. Now, if I asked you the question, have you ever traded currencies before? Who would put their hand up? Hands up who have. Okay. Hands up those of you that have been overseas before. Stick your hand up. Okay. You've had a currency transaction. You may not have been a currency trader, but you have had a currency transaction. Because when you went out to the airport or you went to the bank, what did you do? What did you do to your Aussie dollars? You exchanged them, but the technical term is you sold them. Because you were given a rate for your Aussie dollars, weren't you? What did you change them into? Euro. Some of you Euro, some of you US, some of you Kiwi, some of them, I mean, going to Bali, whatever. That was a currency transaction, right? So those of you that are familiar with that, that's a currency transaction. Now, you didn't change your money to try and make profit. But while you were away, would you agree with me the Aussie dollar would have fluctuated in value? And you would have noticed when you came back, you paid a truckload of commission to the broker or wherever at the airport to change your money back. It's like, where did that all disappear? And then you change your money back into Aussie dollars. Now, what makes a currency rise and fall? I said it earlier, it's this. But what ultimately makes interest rates rise and fall? Why does the Reserve Bank of Australia put interest rates down recently? Since September 2011, interest rates started at 4.75% and they're now 2.5%. Why has the Reserve Bank of Australia kept putting interest rates down and down and down and down? Because the economy has been strengthening or weakening? Weakening. Have a think about it like this. A currency price is a direct reflection of the economy. So therefore, an economy that is doing poorly, what do you think the value of their currency would be doing on the open market? Going up or down? Down. When a country is improving and growing and prospering, what happens to the interest rates? They go up and up and up. And why did they put interest rates up?
To stop inflation.
To stop you spending. If the Reserve Bank puts interest rates back up to 5.5%, do you think it'd be stopping people going there and spending money on their credit cards? Yes, because credit card interest rates will be higher. I'll give you a few stats today. Who in the room here has got a mortgage at the moment? Has got a home? Okay, I'll give you a few hints. In the next 12 months, I think interest rates will be down to 2.25%. And when they get down to 2.25%, at some point in the next 12 months, those of you that have got a home loan right now, here's some stats for you to go home and think about. What is the average Reserve Bank interest rate in Australia over the last 30 years? This is what it is right now. Your mortgage right now has never been cheaper. What's the average central bank interest rate in Australia in the last 30 years? 5.5%. So therefore, those of you with a mortgage, might be a nice idea in the next 12 months to think about doing what? Locking that in for the next 2 or 3 years. Wouldn't you like to get it when it's down at these levels? You want to let interest rates go back to 5.5%, 6%? The people who let interest rates go back to 5.5%, 6% are the people who have got their head in the sand with their eyes closed, hoping. I hope. Don't do those sorts of things. I can help you save a lot of money, not just help you make a lot of money. And this is really simple stuff. All right? Who's got an investment property in the room? Same sort of thing, guys. Same sort of thing. Your rents are going up that you're getting for your houses, particularly here in Melbourne if you live in Melbourne. Right? Interest rates are probably going down. And therefore, we're going to have an opportunity with our Aussie dollar currency trades to also take advantage of that. Because if interest rates go down in Australia and they go up in the rest of the world, our dollar's going down, the other dollars are going up. How many Kiwis have we got in the room? Welcome. Okay, I have about 500 clients in New Zealand, many of them in Auckland. You know where interest rates are going in New Zealand, sadly? Up. Those of you the Kiwis, you know what the Aussie dollar is? When you came over from New Zealand the other day, you got a great rate on the Kiwi dollar, didn't you? Yeah. Kiwi economy is outdoing Australia right now. It's doing better. Your interest rates are probably going up next year. So's the Kiwi dollar. So it'll become cheaper to come over here. All right? So these are the sort of things... I always hear this joke about, we'll send all the Aussies back from New Zealand, provided we can send all the Kiwis back from Australia. But to demystify it, to help you understand how wealthy, successful traders invest in currencies and make money, it comes down to one question. They're constantly asking themselves, what are interest rates doing? In this country, that country, that country. Because as a currency trader, what do I want to be trading one against? I want to be trading a currency when an interest rate may be about to go up versus a currency that might be about to go down because the interest rate is going down. Does that make sense to everybody? Yeah? That's what we're going to do. And when you learn about what makes those decisions happen, I mean, the central banks just don't put interest rates down for the sake of it. They look at things like unemployment, inflation and growth and retail and all these sort of things to make those decisions. Who's the guy that has to understand all of that so you get it? Me and the team. And you'll see some of the team shortly. What you did at the airport was exchange your money electronically, not with the plan of making money, but just because you had to. Well, we do it with the quest of speculating where we believe the currency price is going to make a profit. Okay? And you can do that on your phone, you can do it on your iPad, your iPhone, whatever. And I'll show you today specifically how you'll get that information from myself and the team. And whether you've had no experience in currency trading or a lot, I'm going to help you understand specifically what we're going to do together. Because is it going to change in the next 3 to 5 years? Nope. Currency values rise and fall based around interest rates and economies. Doesn't matter where you live. Doesn't matter where you live, provided you've got the internet, provided you've got access to read your emails, provided you've got access to log into our live training room and watch our professional traders talking to you every day. Okay, if you want to, you have that. How much do you need to start with? Most of our clients start with a couple of grand. But do you know how much money you really need to open a currency trading account? $200. And what's the smallest amount of money you can invest in one trade? 10 cents, thank you. 10 cents. Why do you think the currency market is the fastest growing leveraged instrument in the world? Exactly, because everyone can start and everyone can invest. But it's all good and well knowing, I can have a $200 currency trading account and I can speculate on where I think the Aussie dollar is going, but what do you really need to be able to make genuine returns, real cold hard cash? No, you don't need more money. You do not need more money. You need the knowledge, you need the system, you need the understanding of what's going on. And I'm being very respectful because I started where you guys are. Most Australians don't, but they want to know. They would like to know, but they think it takes too much time, too much energy, all of those sort of things. Well, it doesn't. It takes about 15 minutes a day. Because when I say that for the first time, a lot of people say, oh, wow. Normally, I've been accustomed to spending hours a day trying to figure out where these currencies are going. But who's going to be feeding you the information every day? We are. Teaching you why things are happening. And what we do is we have a process that you will spend 15 minutes doing this, 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 and this, and I'll share it with you today. A little bit of research and reading a very quick trading plan report for the day. You place your trades or adjust your trades, and that's it. We're done. Then you get on with your day. Whatever you want doing, whether it's work, whether it's family life, whether it's retired, whatever it is, you get on with it. Does it help you to sit there and watch the chart all day and watch the price? Right? It doesn't help. It creates emotion. And when emotion comes into the play, what does that end up doing? You go for the mouse and you move things. You fiddle. Right? I'm going to show you how not to fiddle. I'm going to show you how professionals do it. Right? They behave appropriately. And when you're at home on your own and no one's watching, this is what people do, right? You need to apply. Now, let me give you an example of a currency trade, right? Just so as you understand it, because I want to share with you how the Australian dollar moves. It goes on interest rates. However, here, I want to give you an example if you bought the Aussie dollar with that 10 cents, or in this example, we're going to use it as $1, okay? Now, if you bought the Aussie dollar tomorrow morning at 91 cents, and that's about where it is at the moment, and if it goes to 92 cents, that's 1 cent, right? In currency markets, that's 100 ticks. So there is 100 ticks in every cent. Are you with me? And some traders call them pips, P-I-P-S, but it doesn't matter, it's the same thing. Ticks or pips, same thing. Now, if it goes from 91 to 92 and you invested $1 and you say, right, Mr. Currency Broker, and I'm not a broker, by the way, I'm not here to hold your money, I don't touch your money. I don't hold your money, don't touch your money. You use the same currency broker I use. If you want to, you can use whoever you want, right? But if you invest $1 and say, right, that's what I want to invest, and the Aussie dollar goes from 91 to 92, you'll make $1 times the 100 ticks. Now, if it went the other direction, you would lose $1 each time it went the other direction. Now, for that trade, we're going to pay, if we make our $100, we're going to pay about $2 to the broker for the trade. Now, if you invested just 10 cents, you're a newbie, you don't know much, you're nervous, right? And you invest 10 cents and it goes the 100 ticks, how much are you going to make on that trade? $10, and you'd only pay 20 cents to the broker for the trade. So it's incrementally the size of how much you trade with. It's not a flat fee, right? That's another reason why this market is so popular to trade. Okay, the low barrier to entry and the way in which it works. Now, I'm going to give you today the blueprint of the numbers that we actually use together when we trade, how we work backwards. So if we could just get the slides back up, guys, that'd be great. Thank you. Now, in that example, you would make $100, you'd pay $2 to the broker. Now, as a currency trader, I think I have the best career in the world because it doesn't matter what the economy is doing. It doesn't matter whether the economy is doing well, whether interest rates are going up or interest rates are going down, because just as well as I can make money when the Aussie dollar goes up, I can make money when the Aussie dollar goes down. Now, we can take the same position at 91 cents with $1. And if we this time say, no, I don't think the Aussie dollar is going down, we think it's going down. We can take that position and speculate if the Aussie dollar is going down or up. It doesn't matter. So if I can make money as the Aussie dollar is going up and I can make money as the Aussie dollar is going down, what does that make my business? 100% recession proof. Doesn't matter if the Aussie dollar goes back to 75 cents. I can keep investing and investing as it is going down. And if they decide eventually late next year, early the following year to put interest rates up, I can change my mind and trade it the other way. So in the example of it going down, if it went from 91 to 90, that's 100 ticks. I'd pay $2 for the trade and I would have made $98. Depending on how big or small your currency trading account will determine how much money per tick you invest in the market. For example, if you've got a currency trading account of $200, how much money do you think you'll be investing per position to take a trade? 10, 20 cents. But if you've got a trading account of $5,000 or $10,000, we might be investing up to maybe $1 per tick. All right, and I'll give you an example of real, genuine returns of clients with a few thousand and more than that, just so as you're all aware of that today. But if we're going to risk $100, and this is where I'm getting into the numbers now of professional investing that is so simple, but yet many people overlook it. If I'm going to risk $100 on a position and I'm a new trader, what do I want to look to make as an absolute minimum? 200 to 500. Therefore, that risk-reward strategy is not 1 for 1, is it? It's 1 for 2 as an absolute minimum. 1 being the risk, 2 plus being the reward. Okay? And if we're looking to risk $500, we're going to look to make $1,000 to $2,500. This is going to make much more sense in a couple of minutes when I show you the blueprint. Because once you understand the blueprint and you just start working towards that and stop worrying, everyone worries about this. How much am I going to make right now, today? How much am I going to make right now? It's not about how much money you make today, it's how much money you accumulate over the next quarter. And you compound and you steadily build it. How do we ensure the risk? On your computer, who's got a laptop? Okay, desktop? Okay, iPad? Okay, you can trade currencies on any of them. iPhone? Okay, Android? You can do, everyone has the phones available to use the technology that we use. But what I put on your computer and I put on your iPad is what's called a professional risk calculator. Not many people use them. And what it does, it will look at how much you've got in your account. It will calculate specifically the risk we want to take on the position. And it will tell you exactly how much volume to trade on the position. Remember I said earlier, no excuses. There are no excuses when you trade with me because I'm going to give you the tools that they use in institutions and banks to make money when it comes to managing risk. And every position that you take is going to be risking a maximum risk tolerance of 1% of your entire account balance. 1%. Okay? Most investors, when they invest on their own and they invest in the market, what is their risk tolerance they've got on their account? 100%. They have no idea because they don't know when they're going to get out. They don't know how to manage that risk appropriately. Now, if you want to make some notes right now in my presentation today, here is it. The blueprint. Let's say your goal was 35% per annum. How much do you get for putting your money in the bank right now on a 12-month term deposit? Do you know?
2
About 4.5%, 5% if you found some of the banks will give you that. Right, now, I'm going to tell you that I think a realistic outcome return on investment for most of you here in the room is somewhere between 25 and 35% per annum. Now, if I could help you achieve that every year for the next 20 years, most of you in this room will retire wealthy. So please take note of what I'm about to show you, because these numbers are how we do it. Let's say we complete 10 trades in 1 month. Now, the Aussie dollar is not the only currency we trade. We trade the euro, the Kiwi dollar, the US dollar, the Japanese yen, all the majors. There's about 7 of them. And let's say we take 10 trades in a month. And we win only 4 trades out of 10. So in other words, we only actually make money 4 times out of 10. The other 6 trades, we lose money on. So we're putting the bar pretty low here. You're probably thinking, God, he only gets it right 4 out of 10. He's not very good. Right? I want you to know that most professional investors in institutions and banks get their decision right about 55% of the time on average. This is a myth that you think that banks and institutions and wealthy traders get their decision right 70 or 80% of the time. That's crap. They don't. They get their decision right about half the time, and as you'll see in a minute, this is how many of them do it. Let's say we only win 4, so we're actually not very successful on the hit rate of winning trades. But when we win, each trade is a 3% profit. And each of the losing trades is minus 1.5%. So a 40% success rate, and on the winners we make 3%, on the losses we only make minus 1.5 is what we risk. Okay, are you with me so far? Yes? Okay. What is the return on investment at the end of the month? 3%. If we did that every month with only a 40% success rate, the return on investment for the year is 36%. I would suggest 90% of you would never have said that it works out to be 36% annually, would you? You would say it will probably be negative or very low. Right? Now, I can show you strategies and help you understand strategies that are a lot better than 40% success rate. A lot better. But what do you think most human beings do when it comes to money and investing? They get involved emotionally in the market, and that impacts the numbers game. So sometimes they don't get the full 3%, they only get 2.5%. So it's very important that when we win bigger than we lose. Let me give you another example here. Every maximum risk on each trade is 1.5%, but the minimum reward is 3%. Can we make 4 or 5 or 6% on a position? Yes, and sometimes we do. But the absolute minimum is 3%. I don't want to accept any less than that, because if I accept any less than that, what happens to my numbers game? Goes out the window. Who's ever been to Crown Casino? Hand up. Would you agree with me that James Packer has a money-making machine going on there?
Yes. Money printing machine.
Okay, have a think about this for a minute. The odds on a blackjack table or any of the machines in the casino is in the favour of who? The house. How many times do you ever walk into the casino and play a game in there and they change the odds halfway? If you go in there and sit down and you start playing blackjack and you start winning, does the person on the other side of the table, the croupier, walk away? No. What do they want to do? They want to keep playing with you. All right? Why would they bother keeping playing with you? If you're making money and they're losing money, why would they want to keep playing with you? It's not that they want your money back. It's the fact that they know if they don't keep playing with you, they mess with the whole strategy and the whole system falls like a pack of cards. Because they have a set of odds and they must play exactly the same way every single time. And if they don't, they mess with the odds. I mean, how do you think the casino would go every time someone sits down and they start to make money? The casino goes, no, I don't want to play with you, ma'am. You look like a winner. Come over here. It would mess their whole strategy. Would you agree with that? Yes. So therefore, when it comes to making money in financial markets, you can be your own little mini casino if you know the numbers properly and you know how to apply it with a strategy and the system of interest rates and understanding where currencies are going, and you manage risk incredibly well. What about if your desire was to make 72%? It wasn't 36%. It was 72%. Now, I have clients that make a lot more than 36%. So I'm starting with you guys on the bar with the bar low, right? I'm not pushing the boat out at all. But if we want to make, if you say to me when we first meet and get together at the first training, you say, no, Andrew, 36%, that's not going to float my boat. I want to make 50, or I want to make 72%. What do we need to do to get that outcome? One, we need to complete at least 10 trades a month based on the numbers that I'm showing you here. On each winning trade, if we only get it right 4 times out of 10, you need to make sure that we win for 6% on the winners and we lose 3% on the losses. And if we do that, on that given month, we'll make 6%. If we're able to achieve that at a 40% success rate, which is very low, at the end of the year, you'll make 72%. It's a numbers game, guys. It's a total numbers game. And when you understand the numbers and you know the way it works and you apply it properly, you're not tempted to go to the mouse and fiddle, right? You do it properly and professionally and follow the numbers game.